Okay, let's get going, I think. So our guest this week is Joe Blanfriend, who's back after a couple of weeks, but this time talking about AVI, Japan Opportunity Trust. And we've got a little bit of news to talk about. It is definitely quietening down as we head towards Christmas. But I picked out three things that I wanted to highlight. So first of those is Chrysalis. And we know the story on this one. We've talked about it quite a lot. Big discount. Getting up for 50% on a reasonably big market cap, about 400 million. And as you can see, it's narrowed a little bit recently. What they said this week is that they've got visibility over a likely disposal. So basically saying they're about to sell something, they think. I think they wouldn't have said this and they were fairly sure it was going to happen. So from that point of view, I don't think it's an IPO because nothing's been sort of flagged like that. So it must be a sort of takeover of some kind. The key sort of bit of the message was that it adds 5.5p to the end September NAV. That's a quite chunky number. So that's about just shy of £33 million. So it made me think that whatever they're selling, they're probably not going to get more than a sort of 100% uplift at the very most. So that it must be a fairly chunky thing that they're selling. So this was the portfolio at the end of March. So this is I just lifted this from our note because it's easier to look at than what they've got on their website. But you can see what the big ones are here, and they sort of indicated that a lot of these big ones are sort of ripe for some kind of disposal or IPO or whatever. Starting IPO has been rumored for ages. And Brandtech was rumored to IPO quite a while ago as well, before the market started turning down. So I do think that it's possible it could be any one of these, but of course it could be further down the portfolio because some of these things they've bought and they're written down a bit, so they might be rating them back up again. We'll just have to wait and see. The point about this influx of money is that it adds to what they've got already, which is they've got about 33 million already. And they set out to this sort of plan of action back in October to tackle the discount. So they said basically, we want to have £50 million on hand of cash, which I think it would include the Y shares. There wouldn't be cash plus Y shares. And then beyond that, they buy back up to 15% of their shares in issue, which at the current share price would be 60 million quid. Of course, if they start buying back shares, I imagine the share price is going to bounce quite hard anyway. And then beyond that, they asked shareholders for more approval to buy more shares. And then in the end, when they bought back £100 million, they would then switch to a policy of distributing 25% of net cash profits on realizations. So I think, assuming this deal is about to happen, and it does happen, and it's all, it all works, we'll get at least to sort of stage two. So we might see some fairly chunky buybacks coming. And I would have thought that discount will narrow quite a bit from there because everybody's looking for kind of proof that this thing is working, and disposals is the best way of doing that. So I think this means it could be interesting. Bearing emerging EMEA opportunities. This one, the discount's gone out again, and it's almost as bad as it was when the Russians invaded Ukraine. And that seems a bit strange to me. So discount now about 25%, market cap about 55 million, so it's not very big. And they would love to make it bigger, but there is a problem with that. So within the NAV, they've got the Russian assets that they've got, and they are valued at zero. So it's a very similar situation to the old JP Morgan Russian fund. And there's money accruing in Russian bank account for the dividends that they've been getting. And the likelihood was that they couldn't get any more money out at all. But they have just managed to sell some shares in retailer Magnet. And they get dollars for those that have gone into their bank account. So that's going to boost the NAV by a little bit, not very much. Because that was valued at zero, and that's adds 0.6 to the NAV. But they only managed to do it because the Russian government is basically saying that you can buy back shares from foreigners, but only if you do it at least half price, and they've done it well below half price. So they have just sort of cashed this in at a big discount to what it would have been worth if they could have sold it in the open market. But there we go. It is cash in. The likelihood of getting more of this back, I think is low, but it's cannot zero. So, and that's why presumably the JP Morgan Russian trade is such a big premium. So if the board want to grow this fund, they're conscious that a lot of shareholders would be miffed if they brought in new shareholders that would dilute the potential Russian recovery. So they are trying to work out how they can separate the Russian assets from the rest of the main portfolio. And anything they do, they have to sort of run past the sort of lawyers to make sure it's not compliant, not breaking sanctions. But I think it is probably doable. The interesting thing is that the chair, Frances Daly, has said that she wants to stay on for an extra year, even though she's already done 9 years, because the board have said they want to oversee what's going on. To my mind, that kind of suggests that they are quite a long way down the line of achieving something with this. So we might see something within the next financial year, which obviously be quite encouraging if they can do that. They need to get it sorted because, as I said, they would like to make it bigger. At the moment, they're committed to doing a 25% tender in 2025 because they had a performance objective and they're not going to meet that because the Russian assets that they've lost. I think there's just reason to say, no, we don't have to meet that performance objective anymore. But obviously, there would be some shareholders in there already going like, well, this fund's too small. Let's get something through why you've got to do something about it. So they've got to do something radical and then try and find a way of raising more money. I think it's not performing too badly, really. And I do quite like them. We've had them on the show, I think as recently as June, maybe. So you can go back and see Matteo's interview if you want. And I do think it's slightly weird that this trades at such a big discount when this is only going to charge such a big premium. It's almost like people were prepared to give enormous value to the Russian assets value at zero in the JP Morgan Russian one, but no nothing at all for the Sofin bearing merging. It doesn't really make sense to me. So we'll see what happens. I would imagine if they could sort of spin it out as a separate company, it would be absolutely tiny, but it would trade at a premium if it was traded. I think it might be too small to be listed. You just have to wait and see. Ecofin US Renewables. Again, well rehearsed the story. You've heard me talk about it quite a few times. I think the weird thing is that this has gone out to now almost as wide as discount again, almost as wide as it was when they had the tornado taking out their wind asset back in the summer, and I'm really not sure the logic of that. So 38% discount now. I know it's tiny, but so do they. They've said that Whirlwind would come back online next week. That is a couple of weeks later than they originally were targeting. And that represents a real loss of income because the insurance only covered them up until the end of to the 3rd of December. And so where it says Paddock opens there, that line's actually slipped back to beyond this purple triangle. So they've lost income for there. It's not a huge amount of money though. It's tiny in the great scheme of how big the discount is on the fund. They've started getting insurance payments through. They've brought back the solar plant that was attacked by rats online. And they do give a heavy hint that they're quite a long way through the strategic review. So I just think this is looking silly cheap now. I mean, there's no guarantee they'll get NAV for the assets if they do sell them, but nevertheless, it does feel like to me it's on the wrong price. So there we go.